All right, welcome traders. Well, after 2 weeks, some time off, I had a pretty bad cold that affected my asthma. Spurts of asthma caused me to cough, and I imagine I probably will have a couple of those instances here during this video as well, though I will try my best to put you on mute if it gets too bad. And maybe I won't. I can never tell when my asthma is going to pop up and, cause me to have a spurt of coughing or not. Anyways, I'm happy to be back with you guys this week. And let's see, there were a couple bits of housekeeping that I wanted to go over. First one, all right, this is a stream for TradingView people. I did that because I have not done a video, there I go, in 2 weeks. And so I have a fair amount of data. I imagine I'll probably go over the 20-minute mark. So I'm putting you guys on TradingView on the stream so that you catch the whole video. Looks like it is live, looks like it's working. I'll probably jump over here just to see if anybody is actually viewing the video live while I'm doing the stream. Main intention though is just to capture more than 20 minutes of video, and I can do that with the stream. All right, so second thing is I've noted this several times in past videos and posts. I am posting a bit more to Twitter. And if you want to catch my live, real, up-to-date current sentiment, which happens to change quite a bit with the data and geopolitical situations that come into focus during the interim between my weekly videos, then I would suggest you subscribe on Twitter, because that's where I post the most, and you kind of get a better idea of where I'm at. Now, that being said, I did notice this past week Substack came out with the finally Android app for Substack, so now you can download the excuse me, Substack app for there I go, for iPhone and also Android, and you can get those push notifications. That tends to be a better solution than email, because a lot of you guys do use Gmail. Gmail doesn't like the lack of censorship that goes on with Substack, so they therefore tend to throw a lot of the Substack emails into a spam folder, or it just does not arrive in your inbox unless you specifically make it an important email, or create a rule and put it into a folder. So like if you're getting my emails, you'd want to create a Studamus folder and make a rule on Gmail so that all the email that comes from Substack to you would arrive in that particular folder. The other solution that I've heard works is just making Substack emails from me or whoever you're subscribed to important. But if you don't want to go that route, excuse me guys, download the app, get those push notifications, or subscribe to me on another social media site like Twitter and get notifications there as well, and you'll get push notifications that way as well. The extra step though by doing that is you have to then go over to my website to read the full post. So I would just subscribe. Let me see here if I can redo this, and I'm going to pause. I would just subscribe at my website, and you'll get all of these videos, and you'll get the full posts that I make on the website there. All right, enough of that. Let's just jump into these charts. It's going to be a bit freestyle today, guys, because like I said, I don't have any notes, and I haven't done this in a couple weeks, so this video may be a little bit longer. That is the reason why I put TradingView people on stream. What I have pulled up here, first and foremost, is of course always the dollar. Now I drew this bear flag potentiality a couple days ago Don't know if it's actually going to play out like that, but that was the best case scenario or best course of price action at the moment. Now we have just slightly broken through this resistance and are right over the top. I don't know how accurate, though, this actual bottom purple trend line actually is. It may vary by, even as much as a quarter to 0.5% percentage point over here. I don't know. I have not gone back and checked the absolute accuracy of that particular level. Though these levels don't have to be absolutely accurate. I suppose we could do that right now since we're not on a time crunch. Let's zoom out to the weekly and just check it out here. Where did I pull this one from? All right, so this comes all the way over here, and I would have to zoom in. Now I am on the weekly, so then we'll have to zoom in and then zoom in again on the daily. See, this is why I don't do this, kind of a pain in the butt to get down to the level that you want. Let's just not do this right now and assume that that is fairly accurate. That level looks to be. It's definitely something that we are using as both resistance and support at the moment where we are at this time in history with the dollar. And you can see that verified by these two candles, then this candle yesterday, and now right now we're using it as support. So it's definitely a significant level and something we need to pay attention to. So the question really on this dollar today is, are we going to close above this level? And if so, we would need another candle to open and close above the level to confirm that we're going to continue our way up. Now, if not, this just becomes a big old bear flag, which is what I had on the charts here. All right. The other option, if this bear flag does not play out, is, zoom out a little bit. Let's just get rid of this guy here. I don't need that arrow anymore, or I can just move it over for now. The other option is we have ourselves an M pattern in formation. So then we would come back up and touch the underside of that resistance. Now, where does that resistance come from, guys? If you've been following me on Twitter or on my website, you'll know that this level here is a line that we have only touched twice since 2009. Let me zoom out to the weekly and show you where I drew this from. All right, so since 2009, we have been in a secular bull market. As we have been in this secular bull market, the dollar has remained under this level of resistance that I've drawn. Since 2009, we only touched it here, once in April of 2015, and over here in December of 2016. Those are the only two times that we have touched this trend line between 2009 until now. All right, zooming back into the daily. I'm just catching you up on the history of this particular trend line because it is so important. All right, so last week we touched that again. Was that last week or 2 weeks ago? Almost 2 weeks ago now, about a week and a half ago. All right, we touched that again, and as I anticipated, we did not just break through that. Again, if we go up there and touch that level again, once again, I don't expect us to just break through that. That level is way too strong, has way too much historical significance. So if we were to break through the top side of that actual resistance, which currently at the moment today sits at around 114, really what I would expect us to do to break through the top side of that is to really just hit our heads many, many times, kind of like I say, like a jackhammer, chipping away until we finally conquer that and break through to the upside. All right, that is a very poor arrow, but that's what I meant to draw there. If that doesn't happen, then this M pattern plays out. And so really you have, depending on where we close today, once again, three options with this dollar, and the dollar tells us everything. We have to pay attention to it. We have three options. Either one, this is actually a bear flag. All right. So pending the close today and on Monday, all right, because we need 2 candles. We need a confirmation candle. This is a bear flag. Or let's say we close above this level of resistance today, now support, open and close a new candle above that. Then at that point, I will say we are going to form this M pattern, all right? And the M pattern is also a double top and also bearish for the dollar, which is, of course, good for the markets, right? All right, so that could happen. Or if we see this happen here, where we go up, we hit our heads on that, kind of fall down to the, let's say we fall down to this level of support, go back, try again, fall down again, form a little M pattern, go back again, and then maybe we ride along the underside of this until we finally break to the upside of that. All right, that would be super strong dollar, super bullish for the dollar, super bearish for not only the U.S. market, but globally, right? What happens in the U.S. right now is what's happening globally. This is why the Fed is getting a lot of pressure. Like we saw a news article this week that the U.K. was starting to pressure the Fed. And you have other markets around the globe starting the Fed, starting to pressure the Fed to say, look, you need to reconsider your stance on these rate hikes because it's affecting us all. And the global market could go into a panic. We could go into a steep recession, possibly the big D word here, if JPOW and company does not change their current course of action. Is that going to happen? We don't know, guys. That's where the big bet is. Is that the title of this stream? I forgot what I titled it Red October, okay? But the big bet here is whether or not we believe JPOW and company are going to pivot. Are they going to pivot soon? Or are they going to take some time to recalibrate, so to speak, to consider all of this deflationary data that I've spoken about in my past videos? Deflationary data coming from U.S. housing starts, deflationary data coming from rent, which lags 6 months behind in the CPI report, which is why that CPI report doesn't really give us the full picture, right? Deflationary data in terms of what we look at, like freight. I mean, you have gasoline and oil coming down. We'll take a look at those charts today as well and see what we think there. But you have a slew of deflationary data that really leads the CPI report. And so the question is the dollar, are the Fed going way too aggressively at this point, considering this deflationary data that we have been looking at? Will they reconsider their strategy? Will they soften their stance a bit, become less hawkish, a little bit more dovish, and maybe decrease the expected rate hike next time, soften the blow, or even pause for the future? Because if they don't, we are in serious doo-doo, and the charts are telling this, guys. The charts are definitely telling us this. Okay, so I don't have my little it doesn't show me how long I have been on this stream so far. Oh, yes it does. 14 minutes, 25 seconds I have been rambling. Hey guys, I see we have some people watching. This is a perfect chance for you TradingView people. If you're watching this stream and you have a question for me or something you want me to go over, I might do that. I might save it for another video, but go ahead and pose your questions or whatever, and we'll do everything live as always. Okay, so enough rambling on. We know the situation with the dollar. We know it is absolutely critical. This is why I've taken 15 minutes basically to cover the dollar here and all potential scenarios. We must watch the close today. We must see where this particular candle closes, and it is also important where the next candle opens and closes. That is our confirmation candle. So if we close below this level of resistance today, good sign. All right, this means that we will potentially continue this bearish flag down, and when the dollar goes down, in other words, the dollar weakens, that inflationary impact will be factored in as a variable to the market prices. So we would then see markets start to head up. And I'm looking at the US 500 now, which is the S&P 500, a variant of the S&P 500. And you can see that I have charted here a W pattern, double bottom pattern. And this is what my current sentiment is. All right, that this level of support here at 36.50 basically, for all intents and purposes, is going to hold us. All right, so it has held us thus far. Now, one of my subscribers posed a question. It was a very good question, and let me review this again, why confirmation is so important. All right, so on the 30th of September, they said, well, hey, Stu, we broke this level of critical support. Does that mean we're going down now? And I said, no. Remember, one candle here, let me get my arrow out, one candle is not enough. We need to have a second candle opening below that line, which it did, we got that, and closing below that line, which it did not. You can see we closed back above this critical level of support. So that indicated to us that that level of support was indeed as significant as what I had first thought it would be. So that took the S&P 500 right back up above that level of support. And currently we're in the process of retesting that. So here's what my current bias indicates will happen. All right, and this looks to me like a bull flag. So we come back down, retest that support, something that my subscribers know I call kiss mama goodbye, and then off we go to the races. And this previously green W pattern that I drew may or may not play out. I'm hoping it does play out. It's good for the markets. It gives us one last chance at least before this inevitable recession, which, guys, it is coming, and potentially on a macro economic level. I'm talking globally. We have more than a recession. I don't want to think about that. I don't want to talk about that. I don't want to entertain these negative energies. But if I zoom out to my monthly and yearly charts, which I'm not going to do, that's not the intent of this video, I'm not seeing a pretty picture, guys. And so let's just hope I'm wrong about all of that. Let's hope I'm as wrong about that as I was about denying the head and shoulders pattern on Bitcoin that I did about a year ago, right? If I can be as wrong about this coming recession / depression as I was about that head and shoulders pattern and denying that, I would be happy. I would be happy to be wrong twice on a big level, especially about something like this. Okay, let me just jump over, see if I have any questions here. Nothing at the moment. Again, the purpose of the stream really is just so I can save this longer format content for you guys. Let me see where I'm at here on this particular stream. 20 minutes. Good gosh, I can ramble, can I not? But I hope it's been helpful. You can see what I'm currently looking at here. Looking at a double top pattern on the dollar, possibly, or a bear flag. I'm looking at a double bottom pattern on the S&P, which I'm currently tracing all of the indexes through, and a potential bear flag pattern, a bull flag pattern playing out right now as we speak. All right. And this will confirm if this level of support continues to hold, which currently I have to believe it will. Now, what else do I want to trace here, guys? All right. So one thing I wanted to talk about is these high yield corporate bonds versus low yield corporate bonds. Now, I put this on the chart as a ratio. This is where smart money generally invests. I did a video previously, and that's where these circles come from. I'm going to go ahead and delete them right now. I'll leave them up here for now. But what this is like I said, is corporate bond investments. This is where smart money often goes. And high yield, of course, less frequently than the low yield. And putting this ratio on the chart like it is very important for us to see. Why? Because if I were to overlay, let's say, the 10-year U.S. 10-year Treasury, I want to show you something here. This is really interesting. All right, that's good enough. So you can see here, every time that I have this trend line here, every time that the high yield over low yield corporate bonds touched this level of resistance, that was the high point in our U.S. 10-year Treasury. All right, once happened here, and once we hit that level of resistance and fell, 10-year Treasury fell. Again over here, 10-year Treasury came down. Again over here, look at how much 10-year Treasury came down. Currently, we are right up against that level of resistance once again. Does this mean that the 10-year Treasury will come down? Now, like I said before in previous videos, the 10-year Treasury tends to indicate what the Fed's future decision will be. All right, so here we are, and we have started to pivot. All right, right here. And we started to come down, but look at this, guys. I'm going to take out the 10-year indicator over here now. All right, we broke to the upside of this descending trend line on a shorter time frame. This is the daily. Looks like we could be going up to make a double top pattern here. All right, now if this is true, this would lead the dollar. All right, so this would mean the dollar, which we were talking about before, will also form that double top pattern. All right, right here. All right, and if the dollar forms that double top pattern, we have a little, like another week to go before we start to see some recess in the dollar, in the pressure that the dollar is putting on the market. So the way that I should have done this video is probably I should have just led off with this smart money corporate bond yield chart here, which we're up against resistance with, and I should have overlaid that 10-year yield over the top of that, because this right here, this resistance, is very significant and showing us that the US 10-year is going to start to reside in price. And now it may form this double top pattern before. It looks like we're almost there actually today. So really, that's already happening. And if that happens, then that will happen on the dollar, which means we have some more pressure on the markets next week, which means that this US 500 support has to hold. And if this is able to hold, really mainly today and Monday, but we'll have some more testing before we get away from this next week, then we're off to the races for overall at least a double top pattern. S&P goes all the way back up to what it was in November before we fall off and into descent. Where we go after that, I don't know. All right, I'm getting long on the tooth here for TradingView people, so I'm going to jump to one more chart. Posted this a little bit earlier. This is our Credit Suisse chart. Remember, they had some serious scares this last week. All right, and this is the daily chart, and I have this longer term wedge, descending wedge drawn out. Now, generally these descending wedges are bullish patterns, which means this green arrow would be correct, and we hit our bottom here, the red circle. Credit Suisse gave us a scare, but we're going to be okay. Now, why are we going to be okay? I don't know. This is just what I'm seeing on the charts. Could this indicate to us that the Fed will actually reconsider, recalculate some of this disinflationary data that's coming in hot and heavy, start to pivot? And you'll begin to see that in their language as they articulate more dovish speak. All right. So that's what I'm seeing from the charts. Doesn't necessarily mean that's going to play out that way, but that's what I'm seeing from the charts. And so these are the big indicators I'm watching. And of course, I mainly trade crypto, so we have to visit the Bitcoin chart before I leave you all for the week. I'm really, 26 minutes into this. This is going to be a half an hour video. Let's just take a look at Bitcoin and see if it correlates with all of this other data that I'm seeing. Dollar coming down. Remember, 1 to 2 weeks. It starts. It's forming its curve right now. It's forming the top pattern. VIX coming down. Why is it coming down when we are being threatened with nuclear war? Guys, I have no idea. I think the market, really all they care about is money. And if all they care about is money, they're watching the Fed and their decisions more than this war in Ukraine. But that's what I'm seeing. If we jump over to the VIX here, that's what the VIX is actually telling us. All right, we're in a current fear dump. If I zoom in here, you can see that we went back above a level of resistance, which is now acting as support. But once again, we need that secondary confirmation candle. We need to close above this black line and stay above it. If we come back down, let's say on Monday, below that level of support, then fear will continue to dump as I have it drawn out here. All right, so with the dollar dumping, the VIX dumping, we went over the U.S. 10-year Treasury, 2 years in the same situation. Inverted curve yield is going up, which correlates. High yield corporate bonds, low yield corporate bonds hitting that level of resistance. It's all lining up. Credit Suisse hit the bottom of its descending wedge and is now going up. You can see that on the daily. This data is all correlating, guys. There's no discrepancy that causes me to doubt the scenario that support will hold on the S&P 500. And if it holds here, it holds on the rest of the indexes. And if it holds on the rest of the indexes, it spills over to Bitcoin. So here we are. Long-winded approach to the Bitcoin chart. And you can see I mapped this already, guys. I put this on a static post. We have broken this level of this support zone, previously resistance zone. We are also in this descending, or were in this descending. I don't know what happened here with this wedge. Something's messing up on this chart. Let me refresh it very quickly. Yeah, I'll leave page. But that is a descending wedge that we have been in on the Bitcoin chart since November of last year. And I'm going to have to jump back over to the Bitcoin chart here. See if it mapped out for me. Yes, there it is. All right, it's not all messy now. So we have broken to the top side of this wedge this week, guys. That is huge for Bitcoin. That's a bullish sign because this is a bullish descending wedge. Now zooming back in, where are we in regards to this wedge? Well, we didn't just pop out and go crazy. No, that didn't happen. But we did go up, hit our heads on that 50-day moving average. And this to me looks like a mini bull flag right now, guys. After we got through this resistance zone, it is now acting as support. So for me to remain bullish, we really have to close above. See this blue line here, guys? This level, that's critical support since December of 2021. We have not broken down below that and confirmed. I realize we broke below that in June. We got to 17,000 something. All right, I realize that. But we did not confirm, see over here, with a candle that closed below, nor did we get a second candle that opened and closed below. All right, so we didn't even get a candle that actually closed below. We just got 2 wick downs. That doesn't mean anything. So this level of support here at 18,000, basically 18,800, 18,771, has remained support since June, really. And we've come down, we hit it once here, couple candles here, another wick down here, over here, hit it. All of this time, guys, all of this time, it has held as critical support. And so we have to trust that it will remain support for Bitcoin. And if we come down back into this support zone here, let's say we come into this red, I'm still not changing my position unless we break below that critical support, close below it, and open and close another candle below it. At which point, guys, we're probably going to, let me just move this, we're probably going to come all the way down here to the bottom side of this triangle at that point. So let's hope that doesn't happen. This is what we have to watch carefully and closely on Bitcoin. You guys should have this charted out on your daily. It is highly important. I'm betting that this 19,529, what is that level of support we're on right now, if I zoom in, all right, I'm betting that that may hold us. I won't say it will. If we come below, we still have this 18,700 level of support that has held us ever since December. So this is what we're at, guys. We're right in precarious situation. You can see from the RSI here. Let me pop this up a bit so we can see that better. You can see I had this inverse head and shoulders pattern. It has played out. We broke right here, broke through these 2 levels of resistance, big area of confluence, broke to the top side of that. Now we are coming down. This is perfect price action, guys. We're just retesting previous resistance now as support. All right, should we break below this red, this purple one indicates the price where we're at right now at 19,500. This red level indicates our level of support at 18,700 on Bitcoin. All right, so should we break below that red one, that's when I start to become concerned again. But until then, this is happening precisely the way it should. Nothing wrong with what we're seeing here. All right, nothing wrong at all. I got to find the top of my RSI. There it is. And bring this down. All right. So everything's looking good here for crypto, guys. Until we break below 18,700, that is our true line in the sand. And if we were to break below that, then the title of my video here, Red October, would be true. We would definitely have a red October. Generally, October tends to be bullish, and that's what I'm hoping for. We're being supported by all of these charts that I've just perused through in my supposition that the Fed may start to soften or even pause here shortly. I know that is a contra... I'm being a contrarian in that thesis. I know I'm being a contrarian, but when you see market sentiment so bearish, you have to wonder whether the collective is actually right. They may be, but oftentimes when you have so much bearish sentiment, the opposite is true. And what I'm seeing from the charts is telling me it's going to be true. We just need another week or two. So again, if that's true for the markets, it's true for Bitcoin. And if that's true for Bitcoin, what could happen here over the course of the next few days? We come back down and test this 18,700 one more time. All right. And then I'm just going to leave this line here. Let's see what this happens. What's been happening on the altcoins is they just go out sideways for a while. Maybe 2-3 weeks, maybe a month before they finally get some momentum and break up. And that could be true for Bitcoin as well. All right, that's where I'm going to leave you guys. Hope you enjoyed the video. And if you did enjoy the video, please don't forget to like, subscribe. If you're on YouTube, hit that bell notification if you want all of these videos If you're on Twitter, hit that bell notification if you want all of my updates, or subscribe at my site. I appreciate it, guys. It only helps to further this type of content. All right, have a good day all, and we'll see you in the next video. I'm going to stop my recording here first.